The views and opinions expressed in the following paid program are those of the host, callers, and guests, and do not necessarily reflect the views or positions of this station, its management, or owners. Welcome to Straight Talk and Retirement, your no-hype source for financial advice in making informed choices about your retirement planning. Get on the phone to talk today at 314-931-5877 or text your question to 84126.
The opinions voiced in this show are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which investments may be appropriate for you, consult with your attorney, accountant, and financial advisor or tax advisor prior to investing. Securities offered through LPL Financial, member FINRA SIPC. Investment advice offered through Private Advisor Group, a registered investment advisor. Private Advisor Group and JBL Financial Services, Inc. are separate entities from LPL Financial.
Now, here are your retirement coaches, Jeff and Aaron Lapidus.
Well, hello, St. Louis, and welcome to Straight Talk on Retirement, your live and local St. Louis's favorite financial call-in show. I'm Aaron Lapidus, president of JBL Financial Services, financial planner and wealth manager, and I'm joined this week and every single week by my dad, Jeff Lapidus, wealth manager and retirement coach, and my husband, Robert Markham, our life insurance and fixed annuity sales specialist.
Good morning.
Good morning and Happy New Year.
Happy New Year. We help our clients make smart choices about their money. And the way we do that is by designing a game plan, a written step-by-step strategy, a real game plan that has several goals in mind.
First is to preserve, protect, and prudently grow the assets our clients have taken their entire lifetimes to accumulate.
Second is to provide an income stream they can rely on so they can do all the things they want in retirement.
Well, it looks like he's trying to replace you in the new year. Third is cost-effectively addressing their health care needs, like helping individuals enroll in Medicare and choosing the right plan to couple with their Medicare coverage.
And then when they're done enjoying their assets during their lifetime, we show them how to pass them on to the people they love, whether it's their spouses or children, grandchildren, churches, or charities, whoever it might be, without Uncle Sam or the tax courts taking a big bite out of their money. And as their wealth managers, Aaron, Rob, and I watch their money every single day to make sure they're staying on track. And that's why they call us the retirement coaches. Gang, good morning. Sorry, Rob, I was on a roll there, brother.
No, it happens.
It's like muscle memory.
You got up, you saw the news, you got very excited.
Exactly. I know we've got some breaking news here this morning about what's happened in Venezuela, and so we may be breaking away an hour or two. You never can tell.
Yeah, so in hour number 2 at 10 a.m., we're going to could be a full hour break for President Trump to address the nation. So 10 a.m. we'll be with the news.
And Aaron and I literally just found out, literally just before we walked into the studio. We were completely oblivious.
Some of us were.
Well, that's fine. And, our president, he can certainly talk up a storm. So you never know whether we'll be getting hour number 2 in, but it's all important information. And we're glad, obviously, to bring it to you here on the Big 550 KTRS. As Aaron mentioned, our goal is to create a game plan for our clients that help them have a financially secure and hopefully less worrisome retirement. And all of our clients are folks like you. They're our listeners. They're 55 and older, they would like to retire, or they're already retired. And before we get into our subject matter, like we like to do every week, we do want to remind you that our phone lines are open. We'd love to hear from you, 314-931-5877 or 84126 from the text line. But there are lots of ways that you can keep in touch with us during the week.
That's right. Log on to our website, jblfinancial.com. You can click on the Contact Us button and request a coaching session, financial, Medicare, or both. You can also use the Contact Us section to ask a question. It could be during the show. We'll try to get to it live if we can, or we'll try to respond to you as quickly as possible, usually within 24 hours, even over the weekend. You can also click on the pop-up box that appears that says sign up for our monthly newsletter. We call it the Coach's Corner, and Rob does keep the last 18 months archived on the website. So if you're just hearing about this for the first time, there's over a year's worth of material for you to take a look at, but we have brand new material available because is it today, January 3rd?
Yeah, I believe it is.
January 3rd. So we have a new
year, we have a new month, and we have a new newsletter for your perusal and enjoyment. Our first article in the January 2026 newsletter is How Will AI Transform the Workplace? Employers weigh in. Rapid developments in artificial intelligence have left workers wondering when their jobs might be significantly affected or even eliminated. Almost 90% of employers across the globe expect changes by 2030. I'm just going to highlight a couple of the survey's findings. 41% believe they will be downsizing the workforce because AI will replicate people's work, and 47% believe they will transition people from their current jobs to other roles. That's almost half by 2030.
Well, I think I tend to lean more in that camp of individuals that think their jobs will transition into something else. And I don't necessarily believe that means they will be transitioning into something worse or becoming underemployed. I think that AI in a lot of situations is going to open up new roles and new opportunities. For example, just with our own firm, we work with an advertising firm, and they have been able to utilize AI to go through our radio show content. So we record all of the shows, and in the past, we were trying to have people clip them so we could create more bite-sized content for not only our listeners but for our clients. And that was really cost prohibitive for us because somebody would have to listen to 2 hours of a show before they could even begin working. Now AI can listen to the show, clip it for us, summarize it for us. And I believe that created a new job at the ad agency, somebody that runs that software. So I do think that there are new opportunities that are going to be made available through AI. So I don't necessarily think it's going to be all bad. Be good.
I completely agree. I don't think that ATMs ended, the role of bank tellers.
That's a great analogy. I like that.
I mean, it may have reduced them, and obviously there are now new jobs servicing the ATM machines that didn't exist before. So,
sure.
Everything is a trade-off to a certain degree.
Right.
And our next article, great one. I really enjoyed picking this one out. It's called Keeping Cool in Volatile Markets. And this is a great article with some great words of wisdom when it comes to staying the course in volatile markets. This piece used some great examples from very recent history to draw upon. Their first example is January 2nd of last year, of 2025, Trump's tariff rollout. After that announcement, the Dow, S&P, and NASDAQ lost between 9 and 11% over 2 days, respectively, and wiped out $6.6 trillion in market value. It was the largest two-day loss of shareholder value in U.S. history. If you sold during that time, you would have missed an equally dramatic comeback because 1 week later, on April 9th, the S&P gained 9.5%, its largest one-day gain since 2008. Volatility, of course, continued, but the indexes hit new highs by the end of June and more records after that. This article makes the case that having a sound strategy based on your risk tolerance, your financial goals, and your time horizons, and sticking to it is much better than trying to invest money according to the news cycle.
I mean, that's a great point, then why we always discuss the science of retirement before we discuss the art. We like to say the science is the math. What is our game plan for cash flow throughout your retirement? We need to use the power of the market over an extended period of time to help us maintain your capital, but it is not the driving force behind our decision, our game plan for your cash flow in retirement. And I also think that's important because as we're planning for long term, we want to make decisions in what is considered relative calm. We're making well-advised, informed decisions based on your needs. You don't want to have to be making those decisions in a time of, usually it is fear when we're watching, especially when we look back at April. That was a pretty dramatic drop in the market. The nice thing is there was a pinpointed reason for it, but that doesn't necessarily give people solace or confidence when it's happening.
Absolutely. And another that they highlight later on in the article is COVID.
Oh, yeah.
By March of 2020, markets were significantly impacted. But people forget the rally that started at the middle of April and carried all the way through to November to all-time highs.
It was remarkable. I would say, and Dad, I think you've talked about this before, COVID was, I mean, obviously it was unique, but it was interesting in the sense that in our prior, post 9/11, that pullback, people were more concerned about their safety, their family, their health than necessarily the market itself wasn't the driver behind quite a bit of anxiety. I mean, eventually when people realized they were okay and then they looked at their portfolio, there was some anxiety. But initially it wasn't the same financial fear.
When I think about all the people that are retiring over the next 10 years, and I think about, their working careers and as they've been contributing to their retirement accounts, the significant events that we've lived through and come through, and here we are, a spit away from all-time highs again.
Absolutely.
Just an interesting perspective on it. And our next article, Q&As on required minimum distributions. This is always a hot button topic whenever we talk about it. The listeners really are engaged. They always come in with some great text. So I thought this would be a great article to highlight maybe they have an information gap or they're a little confused about it. This article lays out some very basic questions. What are required minimum distributions? Which accounts are subject to required minimum distributions? How much must you withdraw? And will your RMDs affect your income taxes? All really relevant questions that I know that the listeners really, really enjoy hearing about. So I figured this would be a great article to throw in to the new newsletter in the new year.
Great, and what a nice piece that if you have questions you want to refer back, it's got basically most of the basics behind required minimum distributions. Obviously, you're going to want to consult with a tax professional or your financial advisor before making any decisions, but I think this is a nice primer as to what required minimum distributions are and how they work.
Absolutely. And our last article, don't take the bait. Top tax scams for 2025. As filing season approaches, the IRS warns taxpayers to be on the lookout for scams that can cause identity theft, financial loss, or criminal penalties. The agency's quote-unquote dirty dozen list, published annually since 2002, highlights 12 common tax schemes, and I'm just going to highlight two. The first one being phishing and smishing, fake emails and texts that appear to be from the IRS and other tax agency to lure you into disclosing your personal and financial data. Yeah, the IRS is not going to be sending you a text.
So I don't know what smishing is, but I do believe that phishing is very specific. So unlike a blanket fraudulent email where they're just casting a very wide net to just see if anybody's going to respond, phishing in many cases it's going to come from a website you think like irs.gov, something like that, or it's going to contain some of your personal information, so it's going to make you like they're baiting the hook, right? I think that's why they are calling it phishing, because they're luring you in with something that is recognizable to you, either your own personal information or something that looks legitimate. So you definitely want to be very careful about that. Dad, I think you mentioned you've got a great story behind this. The IRS only contacts you by mail, physical mail. You might get notifications on your irs.gov website by email, but you are only going to be contacted with information, letters of inquiry or request by the IRS by mail. They do not call you, they don't come to your house, and they don't send you emails.
No, they don't. I did have a situation several years ago with a client who was contacted by somebody who said they were with the Internal Revenue and they were coming to pick up money. And
they're going to come personally pick up the check. The government was in such need.
If you can keep it in a brown paper bag for me, I'd appreciate that.
Yeah, it was great. So I called the person back and I said, that would be great. What time are you going to come over? And I'll be happy to make sure we have the money here for you. And, of course, we had the Creve Coeur police there as well. So life is good. I was going to say that.
Taking on
Did they
felons.
show up?
Of course not. Dad showed up, though. He hung out at the house for a while.
Absolutely. And, that's, it's important to make people feel comfortable. I would say that to me, the most prevalent one, and one that probably makes you think more than once, is if you're getting something from your bank.
Yes.
And it's always interesting because the tell, if you want to call it anything, is that the bank will never ask you for your Social Security number. They already have it.
Right.
So your bank isn't going to they may hit you with a fraud alert, et cetera, if somebody's coming after you, but they're never going to. They really don't do it by email. So email, they call it email. Some people call it evil mail. Maybe it should be called evil mail.
Well, I fell for it, and I don't.
Be careful.
I don't see it on this list, but I fell for it, which is I got a text message from UPS or FedEx, one of those two, that said, we attempted to deliver a package to you. We're going to return it to sender. If you click this link, give us $1.50. We'll redeliver for you. And
you had to have it.
I had to have the package. And I think this one is an example of that casting a wide net. They didn't know that I had something coming for delivery, but they just sent it out to every number they could find in my zip code or whatever. And I was the one that got caught in the net because I was like, I am waiting for a package. Did they try to deliver it? Sure, I'll put my credit card information in here. Soon enough, fraud alert 15 seconds later.
Yeah, that's terrible.
Well, it's good that your phone is glued to your hand, honey. So
right,
at least
exactly.
You're able to respond very quickly. I think you inherited that from your mom, but it's all good.
Well, unfortunately, I think, and not to belabor this, I think that a lot of these scams, obviously, the people that are perpetrating these scams are clever. Or, they'd be doing something else, but I think that they hit on something that is very true about a lot of people. You just want to solve the problem, especially if you get an email from your bank that says there's an issue, or you get an email from another institution that is holding money, holding assets, holding something of yours. You just want to solve the problem immediately. So it's like, okay, what steps do I have to do to fix this? I'm just going to go ahead and fix it versus stepping back and seeing, like, is this actually even legitimate? Because I know that I'm that type of person. Like, let's just fix the problem.
The scammers are looking for what, as you might call it, a high-trust situation where you're just trying to solve the problem. They're trying to, help you out by expediting it, and then, they dug the hole and you fell right in it.
That's right.
It's
But the funnier thing is, like, I had gotten those texts before and completely ignored them. They just got me right in the moment. So,
Well, the scammers live by the rule. You miss 100% of the shots you don't take.
That's funny. That's funny because there's like a Wayne Gretzky commercial on locally now, too. Anyway, all right. That is our very first 2026 newsletter. We call it the Coach's Corner. You just log onto our website, jblfinancial.com, if you haven't already signed up for it, because Rob was working hard, had the newsletters out 6 a.m. on January 1st. So,
and like I said, we keep the last 18 months on there, so if you guys want to dive in and enjoy some content, by all means, it's there for you.
Awesome.
And just as a reminder, our phone lines are open. We'd love to hear from you, 314-931-5877 or 84126 from the usually hot and heavy KTRS text line.
Texts are quiet right now. I think everyone is still in shock.
Oh, over Venezuela?
Yeah.
Absolutely. Well, I was going to say, since we're in a new year, and obviously the administration is up to its usual antics of not sitting on their hands. We certainly, one thing that we are obviously asked is, last year was a good year. What's 2026 going to be like? And I would say that, before we try to prognosticate on what's going to happen this year, it's probably a good idea to summarize, or at least to give you a feel for what we perceive as the environment and how things have changed in 2025. This discussion is not meant to be political in any way, and it also isn't going to be all-inclusive. But we identified 6 or 7 items that I think were important, that are kind of driving some of our thinking in terms of where the markets are going. Certainly the first one is, we know that the rate of inflation the rate of increase of inflation has gone down. And that's obviously a very positive thing for all of us because, as we know in other countries, especially the developing countries, with inflation, it can destroy the economy. Yes. Fortunately, it seems like inflation, at least the rate of inflation, is a little under control. At the same time, we have seen some prices go down. One of the key prices that the president talked about was the price of oil and gas. We know that those prices have declined. We're waiting and hoping that this decline in gas prices will permeate through the rest of the economy. And we know prices have begun to go down in some other areas, but unfortunately, others remain elevated.
That's right. The next thing that we know that began last year, or actually 2 years ago really, is that the Federal Reserve began to slowly reduce interest rates, but they're certainly not reducing them at the same rate in which they were originally increased several years ago. So we're seeing 0.25% cuts versus, in some cases, we were looking at 0.5% to 0.75% increases when we first saw interest rates begin to rise.
Yeah, I think what's important here to note is that interest rates are used primarily by the Federal Reserve to heat up and cool down the economy. When we're looking at times of high inflation, they want to try to reduce consumption, which is demand, and therefore interest rates typically go up. At the same time, as the economy begins to slow and to cool, and obviously employment is another one of their, mandates, etc., is they lower interest rates. We're kind of in the middle of the world here, right, Rob? Because we know that the economy, as measured by quarterly GDP, gross domestic product growth, continues to show great strength.
That's true. And also, on the other side of that, we see that the unemployment rate has remained steady. So, looking at these two factors as we move into the new year, they should bode well, at least for the beginning part of the new year, till we get to earnings season and see what further rate cuts could be in store as we move through the year.
And we also know that Congress, earlier in the year, passed significant federal income tax reform and estate tax reform. So, at least for this administration, federal tax rates should be stable, which makes us easier for us to plan for things as well as taxes. And then finally, the market, as measured by the S&P 500 index and its performance, had a double-digit increase for last year, which is great. S&P 500 really representing the broad economy. So if you were invested in the markets in a diversified portfolio, most likely you were able to share in those returns. So, and that's a good thing. So nothing's ever negative about a positive return. But
I'm using that one.
Nothing's ever negative about a positive return.
Well, it's one of the, I would like to say, if you're complaining about making profits, nobody's listening. Okay. So where does that really lead us in our thinking as advisors for 2026?
Well, first thing is portfolio rebalancing. So capturing gains and restoring your risk tolerance to the correct level. So as we see nice run-ups in the market, we also oftentimes see your portfolio get out of balance, especially in a more concentrated market like we are in right now, where we're seeing in vast majority, about 7 equities are really helping to pull almost the entire market up. That is also having an impact on the balance inside of your portfolios. If technology is leading the way so significantly,
you could be overweighted in those technology stocks or information stocks and less so in, say, oil and gas.
And some other places that just haven't run as fast as the technology sector has. So taking some of those gains, reallocating them to important places in your portfolio that maybe have the potential to see some returns in the upcoming year. I think this is an opportunity to do that because you've got the full 12-month runway to get to take advantage of some new potential gains.
Yeah, something else that we do, and we really do this more than once a year, but what we do is we want to test the performance of the accounts that we create for clients with their peers. And there are certainly, we have measurements to be able to do that, and making sure that what we can try to do is to try to, as I like to say, put the fastest horses in every horse race.
And we're going to have to take a quick break for a news announcement, and we'll be right back.
From ABC News, I'm Brian Clark. President Trump told Fox News that some U.S. personnel were injured in the operation that led to the capture of Venezuelan President Nicolas Maduro. But President Trump says all those U.S. personnel made it back. Maduro's capture sparked celebrations in Chile. There were similar scenes in parts of South Florida, but also anger in Venezuela as the U.S. has now unsealed a superseding indictment on narco-terrorism charges against Maduro, his wife, and son. ABC's Eric Katursky says the first charges were filed several years ago.
At the time the charges were brought against Maduro 6 years ago, federal prosecutors accused him of using cocaine as a weapon against the United States. The original indictment said Maduro colluded with a rebel militia group in Colombia to flood the United States with cocaine and along the way corrupted Venezuelan institutions to line his pockets with drug money.
This is
the Big 550 KTRS St. Louis, Alton, Valley Park, St. Charles, and the world.
Streaming live at KTRS.com.
We are back, everyone. It's an interesting Saturday morning here for us. Usually we don't have the late breaking news, but this morning we do. So
never a dull moment.
That's great. So far we've already discussed that as advisors, what we're looking at going into 2026 is rebalancing client portfolios to capture gains, restore the risk tolerances. We have been, and we are currently testing our portfolios and how they compare against their peers, as well as against what we would call their benchmarks. Benchmark being is that most of our clients are involved in what we would call moderate portfolios, some more aggressively moderate, anywhere from 60% equities to 70 to 75% in equities. Some are growth oriented, some at 80%. And what we're doing is comparing the performance of our portfolios with those of the indexes, right? The S&P 500 combined with the Lehman Brothers Bond Index, creating a portfolio that matches very similarly the ones that we're putting out for folks. So those are kind of important things. And there's really two other things that we're looking at as well.
Absolutely. And the third one being identifying tactical investing opportunities for the year. And, a couple of years ago when we saw commodities going crazy, that gave us an idea about, some tactical revisions that maybe the portfolio could benefit from. Mm-hmm. Certainly we're seeing during this AI build out that data centers and perhaps even HVAC manufacturers, because of the climate controls that are needed for these data centers, could be
also different alternative energy sources.
Correct.
Not just, I don't mean renewable, just literally alternative energy sources, like a lot of nuclear companies had some opportunities available.
Because of the energy demands that are going to be necessary to fuel this AI build-out, it's going to require the need, or it could require the need for other alternative energy sources, like Aaron was saying. So these could be tactical places where we decide to allocate resources in the new year.
Dad, there you go.
Yes, and then finally, what we need to do, and we're really doing this on an ongoing basis, is to plan for events that will require excess capital for our clients, that is, capital that's in excess of their normal cash flow needs. So wanting to meet with them and talk about, if we aren't aware of, where's extra money needed for this year, where are the sources that we're going to be taking it from, and how are we going to time those distributions to them. Again, not only as portfolio managers are we interested in making sure that we're trying to perform as best as we can, but also we're really distribution managers, and obviously these have impacts not only on federal income taxes, but since most of our clients are retired, they're over the age of 65 at some point in time, we need to deal with IRMA as well.
That's right, income-related Medicare adjustment.
Exactly. So those are some of the things that we're going to be thinking about. Let's take a couple minutes now and talk about some of the things that we hope that you're thinking about, right?
Well, before we get to what we think you are thinking about, let's get to a quick text question about what people really some of our listeners are thinking about.
And our first texter of the day writes, I know you briefly covered this, but does the recent news today regarding Venezuela and their president usually cause the stock market to go down in the near future and gas prices to rise?
So I'll say a couple things, and then, Dad, I know you'll want to jump in. First thing I'd say is usually international tensions or conflicts do create short-term volatility in the market. Usually we see actually positive long-term results from conflict. The second thing I would say about oil prices, we may see a shock in oil prices. However, Venezuela was under quite a bit of sanctions. I'm sure they'll still be under sanctions for a while now. So their export of oil reserves was relatively constrained. So I think there's going to be an initial shock. Because this happened Saturday night, it's going to give the market and traders a whole additional day to digest what's going on. We're going to hear from the president shortly. So I think all those things will lead to what it looks like a Monday morning market open. Unfortunately, the futures don't open as to what the market is anticipated to do until Sunday night. So we can't give much guidance on that. But I would say historically, we'll probably see some volatility initially, and it usually evens out.
And, you make a great point. The market has a nice amount of time to digest this news, and by the time we hit Monday morning, I don't want to say this is going to be old news, but the way the news cycle tends to go, it will be dated news.
Right, we'll move on to some other.
Exactly, there'll be a new catastrophe to worry about, I'm sure.
Right.
Yeah, I mean, you're right. Again, it's really perception. It's based on expectations. Will the flow of oil from Venezuela actually be negatively affected from this change in leadership? Again, who is going to be the new leader, et cetera. So I'd like to think that the negative Nellies always have their day. There's no question about it. But once a little more calm comes to the situation, you don't know what the results are going to be. It may be that they're able to expand their oil production, which in theory should be very good for everybody, right? More oil that's available. Using the same demand, prices will go down. So that could obviously be a very positive thing. And then certainly if we do see, and we don't know, but if we do see a true democratic society coming back from a dictatorship, it's only positive. That's only positive for everybody in the world. And we know that our president likes to put economic incentives behind all these things to get things working. So I think it's a good thing.
Absolutely.
And
go ahead.
No,
Rob,
so polite.
No, we have other texters. Let's go.
We have one more, and our next texter writes, what do you know about the $2,000 that the government said it's going to be giving to retirees and people who make under $100,000?
So there are several things floating around right now. First, there is the senior tax credit that was in place prior to the Big Beautiful Bill that is still in place and actually increasing marginally for 2026. There is the Big Beautiful Bill senior tax credit, which is if you're over 65, filing jointly with under $150,000, you are eligible for $6,000 per person, total of $12,000 if you meet the qualifications. And then finally, there is the tariff rebate that Trump was discussing over the last several weeks. Nothing has been finalized about an actual Trump rebate where everybody under a certain amount of income and over a certain age is going to get $2,000. So that one hasn't been finalized, ratified, or anything yet.
I read something about a warrior fund where veterans were going to get the $2,000. But
that one was already approved for Christmas. I did know that one, yes, that if you're enlisted, that they're going to give you a special a special check this year?
I think it's great. And again, I would say that I wouldn't spend money that I don't have.
Not yet, anyway. We got to wait till it gets deposited or approved. Agreed.
Absolutely. But there are certainly some things that you should be thinking about, we think, to help your advisor and or even improve and make your sailing through this year a little bit better, right?
Right, exactly, because we want your game plan to be independent of what goes on in the world. Like Rob said, you don't want to be trading on the news. So first thing we would recommend is you want to reassess your current cash flow needs and goals. So there are a few easy ways to do this. One, if you are already retired and you're living off of a fixed income of your own creation, meaning maybe you're getting Social Security pension and some distributions from your retirement account, is your checking account staying relatively stable? You're not seeing yourself having to rely on credit cards, on home equity lines of credit, going into the red every month? Are you seeing a buildup of cash? If either of those two things are happening, it sounds like you are a perfect person to reassess your cash flow needs. If you're going into the negative, having to rely on credit, then maybe we need to take a look at not just your cash flow, but where you're spending the money. Where was the disconnect created when you retired? Second thing is, if you're building up cash, maybe you're sending yourself a little too much, or you're requesting a little too much. If you're working with an advisor, maybe it's time to pull that back a little bit. And then finally, taking a look at cash flow needs above and beyond your monthly income needs. So, are you planning any large trips this year? Are you hoping to, or are you on a list for some home remodeling, things like of that nature?
Vacation, wedding, new car. Any of those capital consumption events that are above and beyond what you normally spend on, that maybe you've been putting off or been waiting for the right time. You want to identify those guys early and certainly have a conversation with your advisor. That way, again, the longer the runway, the better we can land the plane.
That's exactly. When we were having this conversation just a couple of weeks ago with a client that was mentioning towards the beginning of the year, first quarter, they were going to be looking for that new truck to purchase, and
better break out another $80,000.
Right. So I said, okay, because we were back. I think this was back either early December or end of November. I said, well, we're going to start now siphoning some cash to the side, because we don't want the day you call for the cash for the new truck to be a replay of April 2nd, where we see a 9% pullback over a couple of days in the market. We don't want to have to time the market for your income needs. So chatting with your advisor and giving them an idea about what some of these additional income needs are going to be for the year will help them help you get the cash when you need it.
Where do you get the cash from? What's the most tax-efficient way to raise the funds? Is it an all hands-on-deck approach, or is it siloed into one or two decisions? I mean, these are all things that, again, as you bring your advisor along for the ride, it can be a smoother trip.
That's good.
I also think what's important is that as well as we hope that we know our clients, and we feel like we do know them reasonably well, life changes, and keeping your advisor up with the things that are changing in your life, whether it's additions or subtractions, whether it's maybe you made a decision that your home isn't really where you want to be. You want to go to a new home. You maybe want to go to a whole new demographic, new location. Letting them in on what's on your mind and how your life is changing really can help them do a much better planning job. And then at the same time, I think retrospectively, it isn't unreasonable to ask yourself, is my advisor's performance meeting my expectations? And again, performance doesn't necessarily have to be solely keyed to rate of return. And with most of our clients, it truly isn't, because we're not brokers. We're helping them plan. We're creating game plans for them. We're, as Rob said, we're along for the ride to help them make decisions on various financial issues as they're going. And so if your advisor isn't meeting the expectations that you have, I think it's important to communicate that, and really to make a decision, or really, if nothing else, after a conversation, to make a decision about whether they can take you further or maybe if a change is required.
I think that's a great point, Dad, because, oftentimes when I get to sit down with our current client, I'll say, what's new? Tell me something good. But in a lot of cases, especially if we see our clients relatively frequently, I think that they forget we don't know everything that they know about them. Things have changed in their lives, sometimes for the good, which is excellent, other times for the not so great, but we would like to hear about that too, so that way we not only are staying on track with your cash flow plans, but we are staying on track with some of your other potential needs that might have financial implications.
Yes, and 2026 really has the possibility of being another great year for the financial markets, the economy, and the world. Having a game plan and good communications with your financial advisor will make an uncertain map a little bit easier to read. And really, that's the big deal. We like to talk, and we don't do this often enough, but we talk about really what is our ideal client profile? Who are the people that we really want to work with and we want to do business with? And at the end of the day, what we're looking for is people that are happy with themselves and with their lives and with their loved ones. That's really an important thing. Folks that want to spend their time doing the things that they love, and typically what they're also then doing is they're delegating their money. That is the responsibility of actually managing that for them, because they have more important things that they like to do. And it's important for you as I don't want to say consumer, but as a client, to really kind of figure out where are you in this whole, paradigm in terms of how much do I want to be involved in investing, how much help am I willing to receive, am I open for advice? Most people are interested in receiving professional advice, but the question really becomes, are they ready to take it and to implement it? So lots of things to think about. I think that the future is going to be very bright for 2026. I like that even though we're obviously in I wouldn't call it a crisis situation, but certainly when you have a change of leadership in a country, those people certainly think of it as a crisis. But the world feels like it's starting to get a little bit safer. It's never going to be fully safe. Volatility is going to continue to occur, not just in the financial markets, but other places in the world. And just as a reminder, the return in the markets, what happens on a daily basis, is truly driven by the expectations of investors, number one, and really not only that of what's happening in the world, but also on the track record of the individual securities that we're taking a look at. Stocks go up, stocks go down, bonds go up, bonds go down. Staying the course and actually having a course and a game plan, knowing that your numbers, what you're doing behind your game plan, so that the math really works, will make the art a lot easier to swallow. Wouldn't you agree?
Of course. I also think not only that, but it helps you, I won't say tune out, because, the goal is not to be uninformed, but I think it will create less anxiety as you are watching the things that are going on in the world, and maybe they're not all positive. At least you're like, that in your own personal life, financial life, you have a plan in place for the long term. And so I think that creates a sense of stability, which creates a sense of reassurance, especially in retirement, when you're, thinking to yourself, this is what I have to live off of, or what I would like to be able to pass down to my family.
It's funny, and I won't belabor this comment, but they really could rename the media the bad news. Because in truth, we have so many ways to access information, not only through our computers, through the internet, through television, and through not just the mainstream media, but also cable, which frankly is now mainstream media. You don't get attention with good news.
Right.
It's only the bad news. And so what happens is, I think that unfortunately we're seeing either bad news in many cases being created, or the perception of bad news, so that we're getting more eyes and ears for their audiences, and that's fine. Having a game plan lets you turn that down just a little bit.
That's right.
Which is good.
And, maybe having a strategy to deal with volatility is also, I think, paramount. And, no one likes volatility in the markets, but
they don't mind to the upside volatility, though.
Not only that, but everyone likes to buy something when it's on sale.
Sure.
Well, in the stock market, you get to buy things that are on sale when there's volatility. That's how certain corporations go from like 180 to 90, and then back up to 180. Now you only get your opportunity to grab them when they're beaten down, so to speak, when there's increased volatility. So, which isn't to say that, we love volatility, but it's just it
is an opportunity.
It is.
I think that people have a difficult time thinking about it that way because, for example, when we get to see all of the post-Christmas sales at the malls and things like that for all the inventory they didn't get rid of over this holiday season, if you walk in and you see a pair of socks and they're on sale for 50% off, you buy them and take them home. You're like, this is a great deal. Kohl's or whatever store you bought it from, they don't call you 2 days later and say, well, actually, you'll owe us some of that money back because the value's decreased even further, and we'd like to recoup some of that. So I think that there is some concern about, when we see volatility, oftentimes people think, will it ever end? Because most people have recency bias, which is what's happening now is how it will always be. So when you're in the middle of something, like I'll go back to April again when we saw volatility, but really we've seen volatility over the last month or so. All throughout December, we've been trading in a relatively, I would say, tight range where we see a nice increase, then we'll see a pullback again, or we see a pullback and we see a rally to the mean again, that people start to believe the market will never reverse and go back up again. So it can be difficult to make purchases in times of volatility. But that's what you have investment advisors for, people that work daily in the industry to kind of help you, as my dad liked to say, have the spine of steel when things start to go not the way you planned.
Absolutely. And I think what we also need to do is take our break.
No, we're not going to take any breaks this hour because we might have a full break next hour.
We do have a text question to get to.
Let's do it.
And our texter writes, I am a retired federal employee who has Blue Cross Blue Shield health insurance through the government. I turned 65 in November and am eligible to enroll in my spouse's Aetna health plan, which is considerably less costly. However, I am unable to reach the Federal Office of Personnel Management to cancel the insurance. I just get a recording to call back later. Do I have a limited amount of time to do the cancellation, and what other option do I have? Online forms say to fax it in, and this could take a month for a response. Thank you so much. Wow, a month for a response.
Well, so at the very minimum, I would fax that in immediately and keep a hold of the fax confirmation, so then that way you have proof of when you sent in the cancellation, because the response is less important than the termination of the coverage. You turn 65 in November and you're eligible. So unfortunately, I am not going to be able to say if you have a limited amount of time to cancel. If you've already enrolled in the Aetna policy, then usually they will accept your cancellation up to 60 days. And they'll backdate it. So that means, like, for example, if you really wanted your coverage terminated January 1st, but you didn't send the letter in until March 1st, they might credit you back that premium. But you don't want to risk it. So my thought is that you want to send that letter in as quickly as possible. Unfortunately, we do work with the federal retiree programs, but we don't work with the administration of them. So I'm not going to be a source of any tips or tricks on this one for you. But I'd send it in as quickly as possible with a way to record that you actually sent it in, like that fax confirmation.
Yeah, definitely want to get a record of you having done it. That way, if anyone has to end up without a chair when the music stops, at least you have some documentation that you did everything you could to remedy the situation.
Absolutely.
Very good. Babe, I guess since we do have a few minutes left, do we want to talk about our recent coaching session with Joe and Sally?
Sure, right after we get through a few more text questions.
Fabulous.
And our next texter writes, "Good morning, Jeff, Aaron, and Rob. I try hard not to miss your show on Saturday mornings,
That is
but
so nice.
if I do, I rely on the podcast. I noticed that there are no December shows listed on either KTRS's website or on your website. Is this due to the holidays? If not, how would I access last week's show? Thank you so much for all that you do." You're very welcome. That's so
really
sweet.
nice. So we are always delayed on the JBL website in putting the shows up
Because of compliance.
That's right. Someone else has to listen to the whole show and make sure we're not offering any pots of gold at the ends of rainbows.
How would you like that job?
To listen to, hey, some of our listeners, they'd probably love to get paid to just listen. But anyway, so ours always delayed. I'm sure that the reason the KTRS shows haven't been posted on the KTRS website yet are the holidays. I know people have been taking some time off, but I'll drop a note to the gentleman that does post for us in the future, so then that way we can hopefully get those up quicker. And ours should be up relatively soon as well, so we really appreciate you listening.
Yes, absolutely. And our next texter writes, "Good morning, guys. Could you talk a little bit about silver prices? Difficult question, but when is a good time to sell?" That is an excellent question. Everyone always wants to know, is now the time to buy? Now it's time to buy. Now you have someone who's probably already bought, and they're looking at this thing starting to move in directions that they really like, and they're saying, wait a minute, this can't last. When do I sell?
So I think, and Dad, I know you'll jump in here too, that this is going to be a different answer for everyone, but what I always like to think is, especially if you were in a position, and if you were somebody that's been a long-time holder of silver, you might have seen a pretty significant move in your investment. You might want to take your initial investment off the table, meaning whatever you originally invested in silver, you might say, I'm going to play with house money moving forward. I'll take my original investment off the table now.
That's a smart idea. No one ever went broke taking profit.
Yeah, I guess my only caveat to that would be if you actually have record of your cost basis in the silver.
Right, you need to have the cost basis or you're going to get dinged.
Right. Well, again, you would only get, because what happens is that just like the sale of any other asset, you'll have to identify this to the Internal Revenue. You'll be self-reporting this. At the same time, if for some reason you did get audited, they're going to ask for documentation, so you want to make sure that you have that. What's funny is that when you were reading this text, I'm thinking 6 or 7 years ago, Aaron remembers this, I bought some gold.
Yes, 6 or 7 years. This is the coins.
Right, I bought gold. I also bought silver coins. The numismatic stuff from the U.S. Mint. I don't have receipts for those at this point, but I do know that I could certainly go back and look it up, and at least I know what the year would be that I purchased these as, because I purchased them as new items as compared to being in the secondary market. So it's just something you want to consider, and it may be even have folks that have inherited items.
That's
Record
right.
Record your cost basis.
Yeah, just keep the copy of the receipt, or at least make a note of when you purchased it, so you can go back and peg the purchase date to the price of the market value of whatever you've purchased. Do you know?
And if you inherited, what it would be is it would be the market value on the date of death of whomever you inherited from.
And you know what? That's the much easier documentation to provide. Because I was going to say, how much documentation do you have to satisfy the IRS? Like, for example, you don't have the original receipt, but you have your credit card statement, which reflects the date you made the purchase. I mean, I guess.
Could you imagine them disputing that? Like, well, no, that doesn't.
That doesn't. We don't know what you bought at Scott's Gold and Silver.
Right.
Could have been a pen.
Well, and the same thing, and it's worse when you bought a mutual fund. It's moved to 2 or 3 times, right?
That's right, because then you have the additional, so at least with something tangible like gold or silver, it's a one-time purchase in many cases if you're owning something physical. Whereas with a mutual fund, you're also not having the dividends and interest. That piece isn't necessarily being recorded or wasn't recorded for a period of time if you've moved that fund multiple places. So it could be a mess. You might want to go back to the December newsletter, take a look at ways to gift that for charity.
When I get elected to Congress, I'm going to propose a
revision of this?
A cost basis jubilee.
Sounds good. It looks like we're almost getting done with this hour.
That's right. So we're going to have to turn it over to President Trump and the news for the big announcements. We may be back. Unfortunately, we may not be back. So we'll see you next week.